Ed, welcome back. You must have been having dinner recently with Professor Siegel, because that's the case he makes. Why are they making a huge mistake?
I agree with him. I think that they made their first huge mistake coming out of the pandemic when they prioritized bringing the unemployment rate down over keeping inflation down. And I think it's partly because it's taken them so long. For so long, they've tried to bring the inflation rate up above 2%. They couldn't do it, so they figured, it's going to stay low. And instead, inflation took off. So they called it transitory. Then it became persistent. And now I think they're responding to their mistake by making another mistake, which is raising interest rates too rapidly here. They keep saying that they're at the low end of restrictive when they talk about the federal funds rate, but they're not taking into consideration the fact that their balance sheet is coming down. They know it, they're doing it, and yet that has a very tight impact on the economy, another restriction. And then the dollar has been extraordinarily strong because the Fed has been much more hawkish than other central banks, and that's creating just havoc in the foreign exchange markets.
I mean, they're in a box, though. They started late. Most people would agree with that. They would probably admit it, and maybe they even have. But they're in a box because they have no choice, right? You got inflation at inflation's at a 40-year high. I hear you on the lag, but don't they need to do what they need to do?
Yeah, look, you're making a good point here, and I think they were actually on the right track before Powell turned much more hawkish at the Jackson Hole meeting, and then just exacerbated that by turning even more hawkish at the most recent press conference that he had in late September. I think the idea of raising rates and then pausing was a good idea. And I think that they, if not pausing in September, they should have signaled that they're going to pause in November. Instead, they look like they're on course to do at least 50 and probably 75 basis points. And I think that's getting to be too much. Look, the housing market's getting absolutely crushed. I mean, mortgage rates have gone from 3% to 7%. I think you're going to see home prices falling pretty rapidly. I think that'll have an impact on rents. Let's see what tomorrow's consumption deflator looks like. We know that rent has a smaller weight in the consumption deflator than it does in the CPI. We know that energy prices have come down. There's some indications that food prices are coming down. I think inflation's coming down, and I think I think because they were so wrong about inflation, they're going the other way and being too restrictive. I think inflation's coming down.
So are you reassessing your outlook as a result of what you think is going to be a mistake?
Well, I think for the stock market, it clearly has been a tough year so far, and all of that is mostly attributable to the Fed. I know one of your guests just said that. What about the Ukraine situation? Obviously, that's also been unsettling, and that's contributed to the global inflation, which we've seen have some impact over here. But I think it's going to continue to be a tough market here until the Fed finally tells us that they're happy with the direction of inflation. For them to say that they're going to keep raising interest rates until they're absolutely sure that inflation is coming down, that creates a lot of uncertainty about just exactly what does that mean? How do they play that out? But I do think we're creating some tremendous opportunities here. I guess I'm an optimist at heart, and when I see corrections in bear markets, I see opportunities rather than reasons to panic. And I think there's plenty of opportunities here.
We'll leave it there. Ed, thank you. That's Ed Yardeni of Yardeni Research.